I'm having a doubt on this question. You know, like the requirement of the question says, like we should state the implication of the financial implication of the transaction,
Yes.
and not necessarily the entries in the book. So I don't know.
The financial implication, of course, could be interpreted in any way. Yes,
Okay.
yes, it could be. Yes, of course. We have done the how to call it the workings on the question. That's
Yes.
what is available for
Mr.
sale,
Fofana.
Okay.
what is required. So now the question is asking you, after calculating that, what would be the financial implications on each of them? That means how should each of the parties, that's A and BA, how each of them could record it in the financial. Of course, after recording, then you'll definitely know that for AA, it will have what? The financial implication it will have is its creditors will go up, and of course, expense will go up. So if you don't record them, you will not know those implications, isn't it? So if you have to answer, you will not stop at showing them on the books, but then you have to comment on them, just like I'm saying. For BA, what's going to happen is the implication is going to have is the debtors or the assets of BA is going to go up by that much, okay? And the sales is going to go up by that much. But if you don't enter them into their various books of accounts, you'll not be able to know that. Is that clear, Kevin?
It's clear.
Excellent. Okay. Yes, someone wants to say something again before we move? Okay, very good. Okay, so let's go. Let's move. Stop this. Okay, so now we can go to our main topic today, which is accounting for short-term decision making. Okay, have you come across accounting for short-term decision making before? Have you? Class? Hello, class. Hello.
Mr. Yes. Can you please repeat the question?
Yes. My question is, we're going to look at accounting for short-term decision making. My question is, have you ever come across accounting for short-term decision making? Have you ever done it, I mean? Some of you, I'm sure, will have done it. Maybe for some of you who have done AAT before and other courses, I'm sure you must have done it.
Yes, we did, but it's like I forgot about it actually. Because I did AAT, but I forgot.
That's all right. No problem. You'll get to mind that. Okay. So can you see my slides?
Yeah. Yeah.
Okay. Good. So I think we can go ahead. We can go ahead. So, like I said, we're going to look at accounting for short-term decision making, and the topic we're going to the topics that we aiming to do today will be make or buy decision and short down decisions. Okay. So, as the name implies, accounting for short-term decision-making is all about provision of financial data, financial report, financial analysis to management of any organization that will be used to take decisions in the short term. And in accounting, what short term means is any periods up to 1 year. Any period greater than 1 year is considered as long term. So to summarize, accounting for short-term decision making is the provision of financial data and of course non-financial data which will be used to help management to take decision. Okay, so this is why I've been saying management accounts is very, very, very important. Any organization you go to, any institute you go to, management is responsible for taking decisions. And decisions are not taken in vacuum. Decisions are taken based on facts and figures. If decisions are taken baselessly, there is a probability that those decisions will not be good. It won't be decision that will improve the productivity and profitability of the organization. So any decision that we take as management must be in the best interest of the organization. And in order to have those qualities, financial information is very, very important. So that's why as management accountants, we are very, very, very key in the decision-making process of any organization. Okay, so please take note of this. So that's why I don't joke with this, how to call it, I don't joke with MA3. It's very, very, very relevant. If there is anything relevant in your course, to be honest, this is among the best subjects that are relevant in your career. Okay, and you're going to do it in practice if you continue to become an accountant. And if you need to further your education, maybe to a master's level or to a professional level, you'll be doing more of management accounting. You'll be doing more of decision making. Okay, is that clear? So we're going to look at the following topics. We're going to go through our introduction. Yes.
Yes, Mr. Warner.
Go ahead.
This topic that we're doing today, I hope it is the same as make or buy.
Those are topics that are part of it.
Oh, okay, okay. Then we did some part of it in MA1.
Yeah. That's why I said for some of you, you will do some topics there in one way or the other. Yeah. Okay. So we're going to look at contribution analysis because contribution analysis is the foundation for accounting for short-term decision making. We're going to look at make or buy decision, either to make a product or to buy a product. And then we will do a couple of questions on make or buy decision. We will look at factors to consider before we can take a make or buy decision. Then next, we're going to look at the shutdown or the discontinuance decision. Then we have, I think, one question. And then I'll give you one more assignment, which is a short one. So many assignments for little mark. That was Favor's problem, yeah? So many assignments, little mark. Okay, so are we ready?
Mr. Fofana.
Yes. Yes, go ahead.
Yes, Mr. Fofana.
Yes, Alain. Go ahead, Alain. Alaji, are you online? Alaji does not seem to be online. Okay. We're going to go. Now, we're going to look at decision making, an overview of decision making. When we talk about decision making, what do we mean by decision making? Are you on board?
Yeah, Mr. Pufana.
Yes.
Decision making is like having a choice between two or more alternatives.
Okay. So decision making is.
Yeah, adding to what you just said, Mr. Fofana. As we all know, the main aim of most organizations is to make profit. So decision making simply means taking the best alternative, choosing the best alternative from two or more alternatives.
Excellent. Very good. Very good. Yes. So decision making, in short, is about choosing between two or more alternatives. We will always have alternatives. Okay? We will always have an option to produce a particular product or a couple of other products. Okay? So we need to take decision. We have to take decision either to shut down some divisions or some departments or some product lines that are not making profit, or we leave them to continue and then make some adjustments. So decision making is an everyday thing, even at the house. Okay? We know at the house, we have to take decisions as well. At its very, very, very low level, in some households, family members will have to discuss, what do we cook today? You know, and on Fridays, most people will prefer to eat what?
Bahal.
Exactly, bahal. So the mom or the dad could say, okay, well, I want bahal today, but maybe one of the kids may not like bahal. Say, no, I don't like bahal. Me, I want benachin, you know, and stuff like that. So you discuss until you agree, okay? But there is one key thing to decision making. There must be options. Okay, if you say you're not going to eat bahal, what are the other options? Yeah, and then there has to be a choice between those options. Okay, so that's really, really important in decision making. Okay, so accounting for short-term decision making is, of course, the provision of accounting reports and analysis, just like I've said, so that organizations can take decisions. Okay, and the decision periods will be 1 day, fortnight, monthly, quarterly, or yearly, you know, but it cannot go beyond 1 year. Okay, if you have to take decisions that are more than 1 year, will fall under the next main topic that we're going to look. That's the investment appraisal, or accounting for long-term decision making. Okay. So, like we said, decision making is all about choosing between alternatives. It has to be two or more. Okay. A typical example could be a decision to either produce a product or to buy it from an external supplier. Okay. A decision to sell a product in a semi-finished form or to process it further to various options and then sell it at that finished product level. Okay, so many types of decisions that we come across in our business life and in our everyday life. So decision making is the most important function of management of any organization. Very, very, very important. Okay, and when the decision is so important and so huge, and that's going to have a serious effect on the organization, those decisions are not usually taken at management level, but then they are taken at weak level. My question is, if you have to take strategic decisions, those are high-level decisions which will have an immense effect on the organization. Are those decisions taken by the management of the organization, or they are taken by who?
They are taken by the board.
They are taken by the board. Okay?
Yeah.
Okay? They are taken by the board. I hope we know the organization hierarchy. In any organization, the board is always the apex body. Okay? They are the ones that are responsible for everything. They are responsible for the management. Whatever junior managers take, or whatever even senior managers, whatever decision they take, must be in line with the overall decision of the board. Their own will be strategic, their own will be high level. Okay, so that's really, really important to note. Okay, any decision must, of course, be in the best interest of the organization. And of course, it must be a decision that will bring about cost reduction, revenue maximization, and of course, consequently leading to profitability. Because business organizations are in existence because they want to maximize profit. So any decision you take must be directed to that line. Okay, so managerial decision making. What are some of the steps that we can take? Okay, cost accounting information is often used by management for what? Short-term decision. And the steps that you need to take for short-term decisions are 5. First, you have to define a problem. Okay, there has to be a problem. Okay, we have to decide to either shut down an operation or to leave it to continue. Why? Because there is a problem. That particular department or product line is making losses. So you must first define the problem and you identify alternatives. Okay, so if you define the problem is product A is making losses. Okay, so what are the options? What are the options? Well, the options are we could improve on product A, okay? We could modify product A, or we can discontinue product A completely and replace it with product D. Okay, so those are the alternatives. Okay, or you could have more than that. So you need to collect relevant information on alternatives. The alternatives are to modify product A, okay? To modify product A, you need X, Y, Z. You need some relevant information, okay?
It's 16 hours.
Another alternative is to discontinue product A and replace it with product B. But you must have all the relevant information. If we replace it with product B, how will product D be received by customers? Is product C not going to face the same issues as product A? And so on and so forth. Then you select preferred alternative based on the information and your assessment of the alternatives, your assessment of information on the alternatives. And then, of course, as you go along, you implement and you analyze the decision that you make. Okay, is this clear? Okay, is this clear? Are we together? I want to take you on board. Are we together?
Yeah, yes, we are.
Okay, any questions? Any contribution before we go? Okay, so no questions. Let's move. Okay, so the first technique we're going to use is a familiar one, which is contribution analysis. What is contribution? Class, what is contribution? I hope you are not enjoying me the way I do my drinks. Eh? I'm drinking my candle like a Nyominka manner.
It's like you love that particular drink.
Yes, I do. You know it. It's tamarind juice because it's a bit better. I don't usually take these candles except the juice one. This follow me brand is a good one. And
It's a good one.
yeah, the tamarind one is it doesn't have too much sugar and it's a bit sour. I really love it. I really love it. Yeah. Yes. So contribution analysis. What is contribution?
Contribution is the excess of the selling price over the variable cost, and it is used to cover part of the fixed.
Okay. Contribution is the excess of
the selling price.
Sorry, you're breaking, Amar. You say it's the excess of
the
your mic is not
variable cost.
Yeah, your mic is not no, it's not clear. Okay, Ahmad, I think you have some issues with your mic. Okay, what is contribution? Hadi?
Mr. Fufa.
Yes, Hadi?
It is the change in the activity level of an organization. Oh.
It is the change in activity level.
Yeah.
Okay, change in activity level. Okay. No, please, I want you to say it. We don't have to text. Okay. Well, okay. That's well, it's not bad, but it's hanging. Okay. So, can anyone help me? What's contribution?
But Mr. Fuana, it can also be referred to as profit, or?
Yes, contribution can be referred to as clean profit. Okay, it's clean profit. But then it's not the full profit. Contribution is, of course, the difference between the sales revenue and the prime cost. It's the difference between sales and all the direct costs. So it's a profit in a sense, but it's not the net profit. Why it's not the net profit is because of the existence of what? There is something that is missing. And what is that? What is that? The overheads. Okay, the overheads. The reason why I say contribution is the clean profit is because it's the money that's left after considering the direct revenue and the direct expenses. Okay? Whatever remains partly is everybody's business because overheads relates to everything else. Okay? So contribution, that's why it's used mostly in short-term decision making because it's clean. Okay? The reason why we don't use profit, we don't use accounting profit in decision making is accounting profit is dirty. Okay? Accounting profit is really dirty. I hope we know that. In order to arrive at accounting profit, accountants can do a lot of things, which will still be in line with the law, but then it will have some morality issues. Do we know that? In order to arrive at accounting profit, we don't only look at the sales and the direct costs, but we look at the overheads and we look at other costs. There are costs that can be subjected to a lot of interpretations. It can be subjected to different interpretations. For example, depreciation, amortization, provisioning. These are all costs that are considered in order to arrive at the net profit. But then they are subject to various interpretations. For example, depreciation. Some organizations can choose to use straight line method. Some can choose reducing balance method. And you know, the effects of reducing balance method and straight line method is different. Some organizations can choose, say, straight line methods, but then when you compare them to other organizations, there might be difference. For example, Company A could say the useful life of our motor vehicles is 5 years. Organization B, using straight line, could also say the useful life of our motor vehicle is 10 years. Who is wrong, who is right? Class, who is wrong, who is right? Both companies, are they wrong?
Right.
Is the first one wrong or the last one wrong? Who is wrong and who is right?
They are both right.
They are both right. They are both right. They are both right. What the standard says, that's IAS 16, is that if you choose any method, you must use it consistently for a number of years. But if you choose straight line method, or you choose reducing balance method, or you choose weighted average method, it doesn't matter. If you're using the same straight line, for example, your useful life differs from the other organization's useful life, it doesn't matter. So long as it is reasonable, so long as it is stipulated in your financial manual, you don't have any issues. Okay, so that's why I say accounting profit could be very, very, very dirty. Look at provisioning, for example. Provisioning also could be subjected to a lot of interpretation. Some could say we're going to use 10%, general provision. Some organizations could choose 5%. They're both right. Okay, so contribution is a clean profit. That's why it's used mostly in short-term decision making. Okay, so contribution, like we said, is the difference between sales revenue and total direct cost. Okay. Contribution, of course, excludes the fixed cost, just like I said, the overheads. Okay, and the overheads, as you know, is everybody's business because it relates to all other sectors of the organization. It's not product specific. Okay, it does not change when the activity level changes. For example, when the unit production and sales change, overhead doesn't change. If you produce 1,000 units of, let's say, furniture per year, okay, and in some years you're able to produce, let's say, 2,000 units, your fixed costs, especially in the area of rent, will not change. So whether you produce less or you produce more, fixed costs don't vary with activity level. Okay? So some of the little things to note on contribution. Contribution margin per unit, of course, the sales price per unit less the variable cost per unit. We all know this. The total contribution is the total sales less the total variable cost. The total contribution margin in percentage is total sales less total variable cost divided by total sales. Okay, so this is some stuff to remember on contribution. So we're going to use it in decision making in some of the topics that we're going to look at. Okay, so next topic will be make or buy decision. Okay, make or buy decision. Somebody told me that he has done make or buy decision before. What is make or buy decision? Make or buy decision, class?
Mr. Fofana.
Hello.
Yeah, I would just explain from my scanty